CPI inflation cools off. Is it transitory? SEC Chairman Gary Gensler promises to regulate cryptos and SPACs someday. Apple's California streaming event is a total bust. All right. We start with the CPI, the Consumer Price Index. And while the reading showed that inflation continues to rise higher, year over year and even month over month, consumers are paying higher prices. Yet the degree of the increase month over month was lower than expected. And this, of course, prompted the stock market, Wall Street, the Fed, and the likes to celebrate and rejoice that perhaps inflation is transitory. And we already have calls that inflation is peaking and it's gone, and the Fed was right, Jerome Powell was right, and there is no need for tapering after all. Meaning tapering the assets purchasing programs, aka the accommodation programs, the emergency accommodation programs that Wall Street have been under since the financial crisis over a decade ago. Just think about this. Wall Street has been under emergency accommodation by the Fed and the government since the '08 financial crisis. Meanwhile, us consumers, regular people, we actually have an emergency. It's called the pandemic, yet they have no problem in removing the evictions moratorium and cutting unemployment benefits for those who cannot find a job. So while the emergency for regular people is over, apparently the emergency for Wall Street continues to go on and on and on. The inflection point where the Fed have to taper and will be forced to remove the accommodation policy is when inflation rises beyond control. Then the Fed will have to initiate tightening monetary policy to control inflation, and this will be lethal to the stock market and perhaps the economy. And while Wall Street and the Fed were celebrating this morning the lower than expected inflation data, don't look for any signs of celebration in the small business world. Inflation pressures and resurgence in coronavirus cases due to the Delta variant are hampering the recovery of small businesses across the U.S., according to Goldman Sachs. You see, Goldman Sachs is doing all right because we have the Federal Reserve printing money out of thin air. This is the emergency accommodation, using that cash to grease up Goldman Sachs. So Goldman Sachs is fine, but who's there to accommodate small businesses in America? Small businesses are in a state of emergency. Who is there to help? Who is there to rescue small businesses? Who's there to level and even out the playing field between small businesses and large corporations, the likes of Amazon, Walmart, and Target? Nobody. But as we always know, the devil is always in the details. And when we read the CPI report out of the BLS, aka the kitchen, because the cooks give us the CPI number, aka the CPI number, which is in no way a true and accurate representation to the reality of inflation in the economy. Regardless, here are some important items in the CPI. And as you can see, the prices of beef went higher month over month by the tune of 2.3% from July to August. And according to the PPI, the leading indicator, this is the Producer Price Index, beef prices went up higher in the month of August by double digits, meaning that the inflation in ground beef prices and beef in general will continue to skyrocket higher, specifically when we get the CPI for this month of September. What about bacon? You like bacon? You might have noticed that you're paying more for it, and the reason is bacon, sausages all went higher month over month in August. But the good news is Frankfurters went down 8.3%. Why? Perhaps Delta, right? But Jerome Antoinette says, let them eat Frankfurters. Now, I want you to pay attention here, because why did the CPI go down? Did it go down because inflation is waning down, or did it go down due to transitory impacts of the rise in the Delta variant? For example, Frankfurters went down because nobody's going out to stadiums. What about coffee? You like coffee? I like coffee. I drink 4 cups a day. Well, coffee prices are going higher, and the reason is we got the news out of Brazil that the output will be bad due to frosts and other weather phenomenons. Matter of fact, coffee futures are trading significantly higher than the prices during the summer. And here's another one, perhaps an interesting one. Salad dressing went up 4% month over month. What happened here? But the good news is peanut butter, Skippies are down 2.8%. There you go. You can eat Frankfurters and peanut butter like a mice. And of course, here is why we call it the CPI. It is in no way a true and accurate representation to what's going on in the economy right now. For example, we have a category, food at employee sites and schools, down 17% month over month. Why? Well, it's not a surprise. We have Delta shutting down schools and places of work, and therefore food at employee sites, the prices are down. Perhaps the food doesn't even exist. There's nobody there. Here's another one. Window coverings up 17.2% month over month. And the assumption here is perhaps the impacts of the Hurricane Ida. Perhaps people bought more window coverings. Who knows? And here it is. Your chance in buying a suit, it's over now. Remember when men's suits were down? Well, men's suits were up 7.9% month over month. It's over, folks. Suits are expensive again, and the reason is we have the reopening and prices of suits are going higher. We have JP Morgan, Goldman Sachs, all of these banks want their workers back, and people are buying suits once again. But the good news is women's dresses, they're down 3.1%. Anybody going out today, tonight, anytime? Nobody, right? No need to wear a dress at all. But this is good news for the gents, huh? You buy your wife, your girlfriend a dress, you score a deal, and now you're the hero. But don't tell her that you got a steep discount for the dress. And then we have perhaps the most important category here, used cars and trucks. So new vehicles were up 1.2%, but used cars and trucks, this is the most important category, pushing inflation higher. And we assumed from the very beginning that this is transitory, but perhaps it's not going to be transitory. Now, month over month, used car prices were down 1.5%. But remember, year over year, used cars prices are still up 32%. And with the supply of new cars nowhere to be found, the chip shortage is still here and projected to go on all the way to 2022. The likelihood is the dip in used car prices will be transitory. Not the inflation, the dip will be transitory. And here it is, once again, skewing the reading of the CPI to show that inflation is dying or slowing down. Not true at all. Take a look at car and truck rental. The prices are down 8.5% month over month. Why? Delta, nobody's traveling anymore. But mind you, car and truck rental prices are up 52.6% year over year. What about airline tickets? Down 9.1% month over month. Why? You guessed it, Delta. But what happens when Delta is over and we're traveling once again? You got to remember this. What's important here is the aggregate demand, meaning absent of Delta, how many people would have traveled? And once Delta is over, how many people will travel again? And so long as the demand is hot, aggregate or non-aggregate, prices will continue to go higher. On top of that, understand that the airline business will suffer from high energy prices. They will pass the high energy cost all the way down to the end customer, meaning tickets prices will go up higher. So this month, it was an opportunity for you to buy and book flights at a cheaper rate because the likelihood is prices will rebound higher. But this is the moral of the story. When you have car rental prices down big, when you have lodging prices for hotels down big, when you have airlines tickets down big, when we have food at employee sites and schools down big, double digits, this is distorting the reading of the CPI as if inflation is transitory. But when you look at the details, you realize that inflation is not transitory. What's transitory is the impact of Delta, and then we will see prices rebounding higher again. Inflation will not stop, I repeat, it will not stop until the Fed starts tightening the monetary policy, or until inflation is finished with its course, doing all of the destruction it wants in the economy, and this will lead to a crash in the stock market and the economy. Because remember, inflation is like a tornado. The trick is to prevent the tornado from being born, so you can enjoy the breeze and the rain. But once inflation is born, once the tornado is here, it's gonna work its course until it's finished. It's a course of destruction. The only way to stop it at that point is to do it manually by using the nuclear button, meaning that the remedy is worse than the illness, or the cure is worse than the illness. Sometimes I have to balance the dumb side with the smart side. It depends on which one is talking. Anyhow, the new clear approach to stop inflation from destroying the economy for a long period of time is to tighten the monetary policy. But tightening the monetary policy has severe ramifications. Number one, it will crash the stock market because, as I've showed you earlier in the video, not this video, but the markets analysis video that I released earlier, I showed you that the majority, almost the majority of stocks in this market are highly sensitive to the liquidity. And if the liquidity is pulled away and the Fed starts to tighten to control inflation, it's good night, Irene. It's over. The stock market will crash like you have never seen before. But perhaps this is the remedy that we need to save the economy in the long term. And what was shocking to me today is I heard the good professor from Wharton, Professor Jeremy Siegel, who said that he believes that stocks are in the 8th inning before a correction. I say the correction already started, Professor, but most importantly, the professor made a stunning admission regarding the CPI. Unbelievable.
You know, as Jim has said, this is a challenging time of the year. I mean, I think, as one of your people on the show had said, that the inflation news, the report way underestimates what inflation we're going to see down the line. I mean, housing, they say, is up 3% year over year. Now, we know all the indices of housing are up 15 to 20%. They say rent is up 2% a year. I just checked nationwide rent. They're up 9 to 12% this year. It's the way the Bureau of Labor Statistics collects those data, very lagged. This is going to get into the data later on. But in the meantime, you know, Powell can say, you see, I'm right. It's temporary. No reason to rush a tapering. I think that's certainly, we saw that initial bullish move. As a result, I'm a little bit surprised that it faded, although...
So now we have the good Professor Siegel, who's known as a corporate propagandist for Wall Street, a stock pumper, now admitting and saying that the CPI distorts the facts. And the reality is inflation will continue to rise higher because this is a lagging indicator. And when we look at the rental prices for shelter, beef prices, fruits and vegetables prices, look at the PPI. This is the leading indicator, and it shows that inflation will continue to rise significantly higher. The next story of the day was the appearance of SEC Chairman Gary Gensler, who woke up from his coma, put a suit on, went to D.C. to testify, and then went home, took the suit off, and went back to sleep. We know that the SEC has been a dormant organization for years, but now it's in a coma, and this is leading the stock market to become an unregulated jungle. But if you thought that was bad, take a look at the crypto market. Scams all over the place, fraud all over the place, and who's there to regulate the crypto market? Who is there to regulate and protect investors from fraudulent IPOs and SPACs, aka scams, the likes of Chamath Palate Potato Tequila? The hope was it will be Gary Gensler, but Mr. Gensler decided to go to sleep just like his predecessor. And now we have SEC Chairman Gary Gensler telling lawmakers that he was taking a hard look at cryptocurrency trading platforms and firms that pay to execute individual investors' trades, aka pay for order flow, while also calling for more funding for regulatory agency. So Chairman Gensler says, we're going to look at, we're going to study, we're going to think about, but after that, we're not going to do anything. We're just going to go back to sleep. And what I find appalling is the fact that all of these politicians questioning SEC Chairman Gensler, they actually have a conflict of interest here because most of them, all of them matter of fact, own stocks. They own ETFs, they have retirement accounts, and they're enjoying this unregulated jungle fueled by the Fed's cocaine operation, which leading stocks to rise higher parabolically out of whack, divorced from any fundamentals whatsoever. On top of that, we know that our beloved politicians have been doing insider trading. Yep, they've been busy day trading, buying call options based on insider information. So if the SEC chairman is about to regulate, he should start slapping handcuffs on all of these politicians in D.C. And perhaps he would slap handcuffs on Jerome Powell, the Federal Reserve, because the biggest market manipulator right now is the Fed. While he's at it, Gensler should slap handcuffs on his own hand, because perhaps he's also trading and YOLOing stocks. But perhaps what we were watching for is Gary Gensler's comments regarding the crypto market. Crypto investors, the tulip market, were a little nervous in the morning that perhaps Gary Gensler will say something crazy, that he might regulate the tulip market. I told you guys, rest assured, he's going to wake up from the coma, bark for about 5 minutes, and then he goes back to sleep again.
Is it your view that stable coins themselves can be securities?
I think it's, Senator, they may well be securities. As Thurgood Marshall wrote in the Reeves opinion, in defining the scope of the market that Congress, wished to regulate, Congress painted a broad brush, and it actually included about 35 different things inside the definition of a security in the 33 Act.
I've just got limited time here, so I acknowledge that. Here's my problem, though. I think what you just said was that they may be securities, or that some are securities. To me, a stable coin doesn't meet the second prong of the Howey test, that there has to be an expectation of profits from the investment. And so if it doesn't meet the Howey test, it looks to me like it's not a security.
And what they're talking about here is the Howey test and whether it is applicable to cryptos or not. And if it is, perhaps the SEC should start regulating cryptos. And the Howey test says an investment contract is, number one, an investment of money. Is it really money or is it imaginary money? NFTs and tulips. I don't know. Number two, in a common enterprise. Number three, with the expectation of profit. Are we really expecting profits when we invest in tulips? Or are we just YOLOing, and when we lose 100% of our money, we take a screenshot, post it on Reddit, and brag about our losses? Number four is to be derived from the efforts of others. In this case, we know what the efforts of others mean. We have Reverend Elon pumping. We have Mama Kathy pumping. We have Jack Dorsey pumping, excuse me. He might dump, but he's pumping for now. We have drunk Michael Saylor pumping. We have pumps all over the place. We have Tom Brady pumping. We have porn stars pumping. So perhaps this is what they mean by the efforts of others. I don't know. Here is another exchange with Gary Gensler. And this time around, it's about SPACs, aka scams.
What are the risks, Chair Gensler, what are the risks that the SPAC market has highlighted over the last year, and what can we do about it?
I think the special purpose acquisition companies, these blank check companies, the risk are to investors and the disclosure to the investors. I've asked staff to serve up recommendations that we could consider as a commission. But in essence, there's a lot of costs in these. And secondly, they usually have a 2-year fuse. And in that 2-year fuse, they try to go out and buy something. And a lot of the institutional investors, when that happens, sell. It's called a redemption right. And retail investors are often left holding the dilution or the significant cost of the bankers and the promoters. So we're looking at greater disclosures and also looking at if there's inherent conflicts along the way. And then again, try to put this out to notice and comment and rulemaking.
And of course, Gary Gensler promised that he will look at, he will examine, he will consider, he will study, he will look at, and then he will go back to sleep. Once again, ladies and gentlemen, the market is an unregulated jungle. Pumps and dumps all over the place, scams using options, business as usual. Moving on to the last story of the day, perhaps the most important event of the day, the California streaming from Apple Incorporated, aka the iMob. Now, we've talked about the iMob in details in last night's video. This company has ceased to innovate at all, and we knew ahead of time that there isn't going to be an iCar. No new innovations at all. The best you can hope for is new shades of purple, perhaps orange, new colors, that kind of stuff. And of course, the iMob did not disappoint our expectations, but perhaps even more important is the pattern of buy the rumor, sell the news when it comes to the iMob and their events. Us seasoned investors, we already knew that ahead of time and we started shorting Apple last week. But of course, there are those who bought Apple in anticipation of the iMob event, California streaming, and they were disappointed that the stock sold off. On top of the historical pattern, we have disappointing, lackluster event here that pretty much produced nothing. There is no tangible upgrade whatsoever. Oh, and on top of that, we don't have any release dates, by the way. The iMob is just throwing products out of thin air. We're going to do this, we're going to do that, and the products will be revealed someday. Apple announces new iPad and iPad mini models. Oh, wow. Wow. That's the innovation right there. Let's see what's in this new, historic 21st century innovation. The new 5G iPad mini has a 12 megapixel back camera, 12 megapixel front ultra wide camera, and the ability to record in 4K. It also supports the Apple Pencil. Wow. All of this shit was already available in Android devices long time ago. But perhaps this is it. This is the game changer. Apple's 6th generation iPad mini gets a USB-C and an all-screen design. Oh, wow. And then the iMob announced the iWatch, or as they call it, Watch 7, with, wait for it, a full keyboard. Wow. Wow. That's the new thing, right? Look at this keyboard. Beautiful. The only problem is when I press G, I'm going to press the whole screen, and yeah, that's not going to work. Okay. What else? The new Apple Watch Series 7 is here. It has improved charging. Wow. 20% more screen real estate. Still water resistant. Oh, how generous of them. And here it is. New colors, including Starlight, whatever that is. It is made out of a 100% recycled aluminum case, and the pricing starts at $399. The Series 7 has the largest and most advanced display ever. It fits 50% more text on screen than Series 6, plus it is crack resistant and dust resistant. Wow. Look at the dust. You gotta buy this. How could you resist? How could you resist your watch resisting dust? And here is the full pricing, by the way. If you're a bum, you can buy the iWatch 3, which starts at $199. If you are not so bummy, you can buy the iWatch SE from $279. And if you are a sheep, a cult member of Apple, you can buy the new one, the improved iWatch Series 7 from $399. And you can enjoy the full keyboard that you will never use. And of course, what is the release date for this iWatch? Later this fall, or later this spring, or the summer, or fill in the blank. TBD. But perhaps the most anticipated revelation was the announcement of the iPhone 13, the revolutionary, the game-changing, high-tech, innovative device, the iPhone 13. And here it is. iPhone 13 Pro has a new Super Retina XDR crispy clear liquid drop display and 120 Hz display, which by the way Android devices had long time ago. But wow, that's the one, right? Apple event introducing iPhone 13 Pro. Ceramic shield glass on front. Oh, how generous of them. IP68 water resistance, wow, redesigned interior to support the new camera system and a bigger battery, wow, oh, A15 Bionic chip, U5-core GPU, Super Retina Liquid Crisp Drop XDR display, the best ever, and Pro Motion, whatever that is. Oh, wow. And of course, the iPhone will cost you $699 for the mini version if you're a bum. But if you're not so bum, you can buy the iPhone 13 for $799. And here's the moral of the story, folks. A big nothing. A total jerk-off, a total bust, nothing tangible, nothing new, nothing game-changing at all, just a bunch of new garbage, hoping that the sheepies will buy an upgrade for nothing, and the cycle goes on and on and on, which makes the shakedown revenue, the services revenue for Apple, ever more important, because there is no growth, there is no innovation in the hardware business, so you have to rely on the services business for growth, which we now know 70% of the total revenue from the services segment, aka services, it's actually the shakedown money. You pay us the rent, the 30%, or we crack your kneecaps. We ban you from the store. Now what happens when we have a judge that allows, or allowed already, app developers to add buttons and links and even incentivize customers to use alternative payment methods, cutting the iMob out of the 30%. We have a game changer here. We have a big problem for the largest stock in the market, and if Apple goes down, so will the market. Folks, this is all I got for you for now. Thank you for listening. Thank you for watching. Good night.